Well, I think structurally, I'm much more optimistic about industrial metals than I am on oil. In the case of oil, you've got, on the one hand, the potential for slowing demand, not just because of the recession that I mentioned, but just over the long haul. About 60% of oil goes into the transport sector, and increasingly we're moving towards an EV economy. So that's going to dent oil demand. And then on the supply side, for all this talk about how U.S. producers are not interested in investing, they just want to return money to shareholders, what we've seen is that U.S. crude output has risen to a record high. The U.S. increasingly is taking market share from OPEC. So you got more supply, structurally weaker demand. That's a bad outlook for oil. For metals, it's better. While a weaker Chinese housing market will hurt metals, the whole transition to the green economy will require a lot more metals to not only create the infrastructure for the green economy, but also to produce all those electric vehicles. The typical electric vehicle uses about 4 times as much nickel, aluminum, many metals than a typical vehicle with a combustion engine. So the bottom line is that I'm much more optimistic on metals than I am on crude oil.
What about the golden metal? We were looking at 2,069 per troy ounce for gold. What is your outlook?
Gold is a bit of a head scratcher. If you look at gold, historically, up until about a couple of years ago, gold prices moved very, very closely with real bond yields. So you could plot the price of gold and the 10-year TIPS yield, and you would get a very, very close relationship. But then about 2 years ago, real bond yields, of course, rose, but gold prices didn't fall. They remained pretty well bid. Now, why was that? It wasn't because retail investors have been flocking into gold. In fact, if you look at the amount of gold held in ETFs, it's been declining for 3 years. The most likely answer is that central banks have been buying a lot of gold. If you look at Chinese gold holdings, about 10 years ago, only 1% of Chinese FX reserves were in gold. Now the number is around 4%. And that central bank gold buying could continue for a while longer. So I certainly wouldn't bet on a significant decline in gold prices. But gold is expensive. And if you're looking to hedge inflation risk, I don't think gold would be my first choice.